Hey, Alan, thanks for joining us. I appreciate you making the time to join us on the podcast today.
Yeah, thanks for having me. Let's do this.
Let's do it. Well, I've begun starting all my interviews with the same question, which takes roughly the form of most of us didn't grow up dreaming of being bankers, digital or otherwise. Wasn't on my list as a 10-year-old. So I love to just hear people's kind of career paths that led them to where they're at. 'Cause I find there's a lot of interesting stories in that.
Yeah, that's great. That's a great one. You can put me in that same category. I did not grow up thinking I would spend my career in banking. Um, let's see. Went to graduate school at Texas Tech. Was coming out of graduate school, and if I'm being perfectly honest with you, I needed a job out of graduate
We all
school,
do when
and
you're
the
coming out of school, right?
and the banks were hiring. So that's my honest path. Um, I came out of grad school in December of 2000, right before the dot-com bust and right before 9/11. Um, and honestly, I needed a job, and the banks were hiring.
Well, there you go. It's a simple answer. Is it law of economics, right? Supply and demand.
Yep, that's right.
Supply meets demand, and there we go. So you were recently named American Banker's Digital Banker of the Year. Congratulations.
Yeah, thank you very much.
That's a very cool honor. But when we were talking earlier, you kind of mentioned that you spent a lot of your time in commercial banking. So I'd love to delve into what you see happening in the commercial side, because I think so often our digital conversation focuses on consumer experiences, the Google or Amazon effect, and mobile apps, and kind of a very consumer user. We're all users of the mobile of the digital banking, and so that's a natural place to go. But I'd love to hear what you see going on and what your objectives are, and kind of in the commercial side, because I think it's a fascinating, slightly different topic.
Yeah, appreciate you asking. I did. I spent the majority, maybe two-thirds of my career in the commercial banking space. So, either as a commercial banker or a corporate banker.
Mhm.
You and I were talking about this. I think I added it up one day and have worked on, in some capacity, several hundred commercial or corporate loans over the years.
Mhm.
Probably close to $500 million in commercial debt. So kind of grew up while I don't love the term, grew up as a commercial lender, um, which
Why don't
is
you love
which
the
is kind
term?
of,
I'm going to interrupt you away.
it's a good
Why not?
question. There's always the bankers want to be called bankers, not lenders. Um, you know, and in the spirit of being an advisor to a middle market business owner, you want to be a banker and an advisor, and not just a lender. So
I
there's a,
suppose that's
a
like
bit of a
partner and
connotation there.
supplier, right? You want to be a
That's
little
right.
different than just the supplier of cash.
Yeah,
Okay,
that's
that makes
exactly
sense.
right.
So
So
commercial.
there's a lot to explore in that commercial space for sure. Um, a couple of things that I'm personally
Mhm.
invested in and working on. I think we have a big problem in the commercial lending space, specifically with regard to how long it takes for
Mm.
a middle market company to access capital. Um, we've seen so many, just candidly, awesome developments on the consumer lending side, and then even at the lower end of the small business space. Consumers and truly kind of micro and small business owners can access capital in a matter of hours or a couple of days. But as we think about middle market companies, that $50 million manufacturing company in Austin, Texas, it takes them months to be able to access capital to put 5, 10, 15, $20 million in capital together. That's a big problem that I see in the commercial space.
Why do you see that maintaining that length? I mean, it's interesting. It's the same thing I hear from people in the HELOC space. Like, they're losing business. That's been a declining business for years overall, and a lot of them see
Mhm.
people shifting to personal loans or other ways to finance it. In large part because it's still 60, 90, 120 days time to money, and they go, we have to solve that. And I've heard all that reason, but I'm curious, why do you think there's still such a timeline? What is it that takes so long, and what do you see happening that can help us reduce that time span?
Yeah, there's three buckets that I focus on, and one of the things that I want to do with the rest of my career, um, is solve for this, because I think, on average, across the commercial lending space and commercial lending industry, it's probably 90 to 100 days.
Wow.
That time to money equation. I personally think we can take it to 10. It's going to take a lot of work.
That's a bold. That's a
But
bold goal.
that's my what's it called? A BHAG? That's my
Big, hairy,
big
audacious.
hairy on.
Yeah, the BHAGs.
Yeah, that's mine. And it really kind of falls into three main areas that create a lot of the problems that create these inefficiencies that adds days and weeks to the process. So kind of first problem is how data gets to banks. It's very, very inefficient. Banks are asking for 15 to 20 pieces of information, much of which gets emailed to the bank in a PDF or an Excel file, something like that, and then has to be ingested, for lack of a better word, which requires an analyst or a human to take that information and put it into the systems that we use. That's kind of the first, that's the first big bucket of inefficiency that I see in the space. And clearly with, open APIs and the ability to pass information pretty freely through, freely but securely, let me say that.
Yeah.
The ability to pass information is pretty efficient these days. So I know that we can solve for a lot of things in that first bucket. It's the second and third that really present problems in my mind. And, the second is that underwriting and negotiation process that takes place. Because as the bank has received all this data, then you got to underwrite it. And, there's a lot of humans involved in that, but even that can be automated at scale. Because while complex, we're still talking about pretty straightforward P&Ls, balance sheets, cash flow statements, agings, inventory reports, things like that. And it's just data, it's just numbers and modeling, to be able to decision off of. And there's a lot of work in that second bucket that can take place. And then last, that third bucket is you start thinking about all the work that takes place in the back office of a bank, and with outside legal counsel, to be able to document that $10 or $15 million middle market, C&I loan. There's a lot of inefficiencies that are in that third bucket that can be automated. So at least, that's one person's opinion, right? That's a way oversimplified explanation of where those inefficiencies are, but I think it's a first step. And I've even started challenging the fintech community. I'm like, help me solve this. Help. Was it Jerry Maguire? Help me help you. Let's find a way to solve this together, because it is, when we do that, we have accelerated the time that it takes for a middle market company to access capital, and it's a complete game changer for the business owner.
Yeah, those are really interesting buckets, and I think you're right. So often, I find in the consumer space, it's so helpful to remember why you do it and the impacts. And making credit available to consumers can be really impactful. Buying a home or refinancing debt, buying a car. But for businesses, it makes a tremendous impact on the local economy. It's the difference between growth and not growth, taking advantage of new opportunities and not being able to. And it's such a tremendous value if you can do that for the businesses that you're supporting.
Yeah, I couldn't agree more. If you think about the middle market business owner, they're employing good, middle market as defined by a bank is typically, maybe 20 million in gross revenues on the low side, up to say 500 million on the high side. So you're talking about companies that are employing 50, 100, 500 people, and need capital. As you and I talked about, capital and people are the lifeblood of business in the United States, around the world, certainly here in the U.S. So anything we can do to help them is time well spent.
And why do you, I mean, you talked about, asking almost imploring the fintech community, help me help you. It is true that a lot of fintech innovation has been focused on consumer experiences, consumer products. Why do you think there's not been more investment from fintechs into these kinds of opportunities? Because they don't sound, frankly, that different from what's going on in many places in the consumer world, simplifying data interchange, standardizing data formats so you can do them through APIs instead of document presentations, automating an underwriting process, and then improving upon the accuracy of it. Like, why do you feel like, do you have an idea of why, and do you see fintechs moving into the space now?
Yeah, I think it's certainly not just one thing. I mean, the commercial space is very, very complex.
Mm.
As we think about making a loan to a consumer, we can, generally make a loan to a consumer, and automate a process off of fewer, a smaller data set or fewer
Hmm.
pieces of data, and you can still make a good decision about a consumer loan. On the commercial side, that data set goes from, you know, a 5 page application. You're obviously digitizing all of this. It goes from 5 pages to 50 or 80, or 100,
Hmm.
pages of information that one would need to ingest to be able to automate the commercial lending process. I'm only saying that because it's exponentially more complex. You know,
Hmm.
every every commercial loan is different in some regard, whether it's, the company is doing business a different way, or, a variety of different spaces, that businesses operate in. I think the simple answer to your question is it's just a lot more complex, to automate the process of extending commercial credit than it is consumer credit.
I would just say to the fintechs out there that are listening, or the possible founders, that complexity is also an advantage when it comes to building a moat. Like, the harder,
Yeah,
I remember when we were starting Upstart, my CEO used to ask me sometimes, like, how hard is this to do? And I'd say really hard. It goes, good. It's gonna be that much harder for anybody else to follow. And I think
yeah.
that's a good reminder that complexity is sometimes not a bad thing to tackle, because it does build a lot of advantage if you get it right.
I think you're right. I mean, I happen to be inside of a community slash small regional bank. Um,
Mhm.
I mean, we're relatively small in the grand scheme of things, but we probably do 150 million, 200 million a month in commercial lending, which is
Mhm.
not bad for a
Mhm.
community bank. But I think it's the opportunity that I see is, community banks and fintechs coming together to be able to solve for this, much more efficiently than a money center bank that's doing 3 billion a month in commercial loans. I mean,
Mhm.
we've got to kind of start on the, maybe smaller
Mhm.
side of the commercial lending space to be able to really do this right, versus trying to solve it at the
Well,
top end of the space.
super large deals are always like, I mean, however much more complicated your $10 million CNI loan is than a consumer loan, your $500 million loan is equally more complicated and easily
Yeah,
justifies the cost of people and headcount. And I mean, I think
yeah.
it's harder to make the case that you can really improve the outcomes. Where I imagine part of the benefit is not just speed to money, but also the ability to scale the business for a community bank and actually
Mhm.
serve a large number of banks, or sorry, a large number
Yeah.
of businesses and customers.
Yep, I think you're exactly right. I mean, all of us that are running banks are, very focused on efficiency ratios and a
Hmm.
couple other metrics. But as we're able to automate the commercial lending process, even if we're only doing 150, 200 million a month, as you automate that process, you can run the bank with a leaner team of credit administration professionals, you know, back office professionals, even commercial bankers. You can run off of leaner teams because you've automated so much of the process, and you get such a, in you know, in theory, you get a much better result from an efficiency ratio standpoint.
Mm. So do you see anything interesting happening here? Are you seeing the beginnings of movements of interesting technologies or people actually making dents in these three big buckets?
Yeah, I am actually, and it's exciting to me. Admittedly, we got a long ways to go, and it's going to take the banks and the fintechs coming together to make it happen. But in that first bucket, what I would comment on is the ability to access and ingest data today for a bank is exponentially easier than it was even 5 years ago.
Mm-hmm.
So you start thinking about the opportunity to API into with all of the right
Mm-hmm.
acceptances and
Permissioning. Yeah, yeah.
permissioning and all of that. Clearly, those are table stakes. But the ability to API into the accounting system and be able to ingest data. As you think about accounting firms and the data that lives inside of accounting firms,
Yeah,
I
yeah.
mean, we make loans off of data that's been validated by an auditor. Clearly,
Mm-hmm.
that's a mission critical component to it. But even the accounting firms are moving into the modern API world, which will only make it easier to access data there. So you get the idea in that first bucket, the ability to access and ingest data, um, you know, without having to take several weeks to have a client email you PDF and Excel documents.
Take the
It's getting
data and
much easier.
yeah, type it into your own internal
That's
version
right.
of P&Ls look
Yep.
like. Yeah, I mean that feels like the foundational layer, right? Like if that's there, that's the to do the automation, to improve the underwriting, to simplify the back office. The first thing you need is like the data in a readable, manageable,
Yep.
processable format. And if that's
Yep.
happening, it feels like it opens the door for lots of innovations farther down that stack.
Yeah. So that first bucket becomes much easier, and that second one, which was the lack of a better word, underwriting and the negotiation piece, or bucket. I mean, I'm seeing several firms um, automate the process of small business lending.
Mm-hmm.
Say up to, I've seen a couple different firms just in the last few weeks, but say that small business that's looking for up to $250,000 in capital, which is not an insignificant amount of capital, but I am seeing firms that are solving for that smaller side, um,
Mm-hmm.
of the business. Over time, I think we see those models that they've developed evolve and
Yeah.
be able to work in bigger loan sizes,
Yeah.
more at scale. Um, and then last thing I would comment on is, we're seeing some really interesting technologies and transformations in the back office of banks. Um, I'll reference one if that's okay. A firm called
Sure.
Compliance Systems is helping us with the process of digitizing documents in you know in the spirit of an integration with our LOS. If we have if we've got a company in Texas versus a company in North Carolina, you know that's a you got different set of state laws and a different set
Mhm.
of dynamics to be able to manage through from a legal perspective. So compliance systems is helping us automate um, you know a big component of the documentation process,
Mhm.
within what we're trying to do on the commercial side and the consumer side, specifically commercial side. So to answer your question, we're seeing some really meaningful moves in those three buckets, but the industry, even despite those moves, hasn't really seen that time to money come down in a really meaningful way quite yet.
I think it's such a great metric for how you're actually, measuring success. Can we reduce the time to money? I always focus on both kind of what we call the input metrics, the things I can control, and then the ultimate objective, which is often a little harder to like. No one thing is going to solve that, but it's always kind of the true north of like, here's what we're trying to achieve. I love your BHAG of 10 days time to money for commercial loans.
We can do it.
That would be impressive. I wanted to touch on one area before I hit you with the lightning round, which is I know you founded like a payments fintech company a while ago, and we don't have to get into the details of that. But I wanted to know, what were the best lessons you took from being on kind of the in the fintech side of the house as you've gone back into the banking side of the house? Like, what were the things you learned or saw that you thought were really useful lessons and that you've been able to take and apply within the context of a more traditional financial institution?
And that's a great question. Nobody's ever asked me that before.
I like to be original.
Yeah, well done. What I learned, and admittedly, my background's a little funky from the standpoint that I came from the business side of banking and sort of evolved over to the technology side of banking. But I think what it really taught me was, and what really helps me is understanding of business outcomes for banks. I'm blessed with a lot of good knowledge around how banks make money. Across the 12 to 14 businesses that we're ultimately all trying to run at the same time, got a good understanding of the business side of things and how banks drive revenue and make money, and also have a good understanding because of that work in the fintech space and the software development side of things and technology side of things. Got a good understanding of how to make money in the banking space and a good understanding of tech, and can kind of bring those two things together to produce real outcomes versus, kind of winging it, I guess, on the technology side.
Well,
we tend not to work on a lot of things that we can't turn into revenue in a pretty short period of time.
I love that answer. I read this interesting book called The Great Game of Business, I want to say is what it was called, but having everybody in your entity understand, it's one of the things I work with at Upstairs. Like, I want everybody to understand like how we make money, where the advantage and the ability to make money comes from, and how what they're doing impacts margins, profitability, how do you fit into the ultimate economic engine that is the business? Because it's very easy, I think, for many people to do their job within a certain context without really understanding what the flow of value is in the business and how the business really makes money and how you're contributing to that. And particularly technologists like just build the thing that they're building, right, without really understanding where it connects to the ultimate value chain of the business and how it adds value. It's such a critical thing for, I think, everybody. There'll be some career advice too. Like if you're ever in a business and you understand how it makes money, like how it really adds value and differentiates and makes money versus competitors and how you're contributing to that, figure it out.
Yeah,
because when
you do, you're going to crush it.
Then you're going to really understand what the real priorities for the business are or should be, because it's really at the end of the day about that. I like that answer. Exactly but that kind of leads me to my my lightning round, my three final questions that I have. First question, I think three last questions. So here they are for you, Allan. Number one, what's the best piece of career advice you've ever gotten?
The best piece of career advice I've ever gotten came from a guy named Craig Cottle. This was many years ago. As I was coming out of grad school, and as I told you, needed a job. But Craig's advice to me was, no matter what you want to do in your career and in business, he said, Allan, you've got an opportunity to go, ultimately work for a bank that's going to pay you to train you as an analyst. And I always look back on that. I didn't necessarily understand it at the time, but his advice was, go learn as much as you can inside of that bank, because it will inform, basically whatever you want to do in your career. So I owe Craig Cottle, if he's out there, a lot, because that one piece of advice has stuck with me for, a lot of years.
Interesting. I like that. And I certainly always advise people, one of my favorite pieces of career advice is like optimize for learning. Don't optimize, particularly early in your career. Don't optimize for money or title or, brand name of company, but optimize for the opportunities that will, and some of those things are not bad, but like whatever you learn the most from is typically going to give you the most value for an opportunity. So I love that.
Yeah.
Second question is, what's the best advice you've heard about the commercial banking sector? What's the advice when you got into the industry, the thing you learned and said, hey, this is the thing that stuck with me?
Oh goodness. Best advice in the commercial sector is never stop paying attention to what the client needs and what those middle market clients are looking for, and what they need. Sometimes they'll tell you straight out. Sometimes they'll tell you, you gotta read between the lines. But I think the point is, don't ever stop talking to your client, because ultimately that's, those are the folks that are making things happen out in the entrepreneurs and the innovators and people like that are making things happen in the business world. So don't ever stop talking to them.
That resonates with so many people. Come on, say, don't forget, like, focus on the customer, like provide value to your customer, be that a consumer or a small business or a large business or bank or whatever. Like, I like that.
It's not the easiest thing to do either. I mean, we all kind of evolve on our career and end up taking on, bigger and bigger roles. And we sort of, when that happens, we get farther and farther away from the client, trying to run businesses and things like that. So you got to be very purposeful about it and very thoughtful about it. But, even as you rise into the C-suite of a bank or otherwise, don't ever stop talking to your old clients.
Always talk to your clients. All right. Last question. You've made one, but we're going to ask you for
these are good.
What's one bold prediction for the future? You've already got your 10-day to money BHAG, so we're not going to let you get away with that one. One bold prediction.
Bold prediction for the future. I think it goes back to what I'm most excited about, and that is the evolution of fintech into the commercial side. I mean, I think we all have the ability to really change the game in the commercial side of fintech, as we think about the opportunities that exist in commercial lending, certainly the opportunities that exist in business payments. I mean, the more we can speed up money, whether it's lending money or the time that it takes for a company to get paid and actually get money in their account, 2 to 3 days, and in the U.S. is kind of ridiculous at this point. Getting to real-time payments, getting to a place where we can extend capital to those business owners in meaningful amounts. I guess my bold prediction is we're going to get there, and it's going to happen. It's going to happen sooner than we all think.
I like that. So often technology, like, we're waiting for it forever, and then all of a sudden it happens very rapidly when it comes, right? It kind of catches you by surprise.
That's right.
I like it. It does 2 to 3 days to get money. It does still shock me sometimes.
It's tough.
It works, but change is coming. All right. Well, Allan, thanks so much for making time today. This was a fascinating conversation. I appreciate your sharing your perspective and insights with the audience.
Absolutely. Thanks for having me. I appreciate it.